Well, talk about a major big prediction. Big tech is at its lows. There should be upside from here. That is a big statement from this gentleman. Want to react to that video, okay? That's a huge deal. And the reason this is a huge deal is Apple, Google McDougal, Amazon, and Meta are all reporting earnings over the next few days. So the fact that somebody comes out and says big tech's at its lows right now and there's upside from here, so basically saying buy, holy smokers, that ain't no jokers. That is a huge comment, okay? So we'll watch that, we'll react to that, and we're going to know very shortly if that gentleman's prediction is accurate or not, okay? Next video I want to react to is this one here. Home builders outperform over the last 6 months. I think that's an important video to watch, right? Because everything that's going on in the housing market, what's going on with those stocks, there's some really good points I want to make about what's going on there, okay? In the last video we're going to react to, it's a 3-for-1 here today, is this one. Meta needs to focus on its core business, not the metaverse. I am somebody that's buying Meta stock. I have been buying Meta stock, and I plan to buy a lot more shares of Meta. And so I have pretty strong feelings about this, and I want to hear what their points are and then kind of react to it from there. I hope you guys enjoy this. As always, I appreciate everybody for joining me. 17,000 plus subscribers at this point in time. We'll probably be over 17,500 subscribers within the next couple days. So I appreciate everybody for being here and subscribe to the channel. Much love as always. If you're looking to join my private stock group, get access to everything in there, including the Discord chats, including our private group in Investor Report on a weekly basis, and all my course curriculums. Go ahead and apply with the pinned comment down there. Alrighty, guys, let's get into this.
BMJ, he happens to be right here on set with me.
It's such a big statement, like, you know, everybody's even clapping for it. Like, holy smokes, this ain't no jokers. Everybody clap for him. He's saying big tech's at its lows.
To come to the floor of the stock exchange. So people are saying this rally has some legs. How much is really riding on this week with the next 3 days of big earnings?
It's huge. I mean, we saw the shot in the arm that Netflix gave the market a couple of weeks ago, Scott. And so I expect nothing less for this week. Obviously, the tenor of the market has changed in the last week. And so we've gone from like max pessimism to today was just a body blow in the morning, followed by this steady grind higher, despite all the bad news coming out of China and China tech, all the bad news coming out of the UK. So it seems a much more resilient market going into the second half of this month.
Have you turned more optimistic yourself?
That's how quick markets can start to shift sentiment, right? And this really begs a question, right? Is it the stock market that makes people feel good or bad about the future of the stock market and its performance? Or is it people's opinion that dictates the stock market? What I have found over the past 14 years and seeing, you know, several different crashes, seeing up markets, down markets, everything in between, what I have seen is the stock price performance, the stock market price performance dictates whether people are bullish or bearish and what their commentary is. And that's why when stocks are going up and up and up, everybody starts feeling this level of euphoria and confidence. When stocks are going down, they only see like everything's darkness, right? It's the stock market that dictates actually how people feel. Very, very interesting, right? And it's just the way it is. I don't know if it's human psychology or what it is. It shouldn't be that way. It should be the opposite, but it is what it is. I've consistently seen that.
Can't help but be optimistic. I'm optimistic by nature, Scott. But, you know, take a step back.
Be realistic, too, though,
You got to take a step back and you got to say, where are we with this? You know, obviously the June to August rally was a head fake, but we've held the lows of May and June for most tech stocks. Are we going lower? On a day like today, in the face of the bad news, I think there's a lot of resilience there, and I think we can press higher from here.
So people know you for being an investor in tech. That's what we call you, tech investor, and yet you don't own any of these mega cap tech stocks. Why?
For me, I'm more interested after this huge drawdown in tech, especially for the growth tech that's been over a year and a half now of a drawdown, in the what's been left over, the carcasses that are going to by the side of the road that many have left for dead, but some of which have life in them and are going to bounce back. But they're not just going to bounce back 10%, 15%. Some of these names have the chance to triple, to double over the next 6 months, especially if there's a
boom. Whoa, okay. Whoa, okay, baby. All right. He's 100% right in many of these stocks will go up 2x, 3x, 4x in a pretty short amount of time. Now, he's a whole different level of optimistic there. He just said some of these stocks are going to 2x, 3x over the next 6 months. What? What? Okay, that's a huge statement. Because I'm saying over the next 2-3 years, there's going to be countless of these stocks that are beaten down dogs that are going to 2x, 3x, 4x. But that's over the next few years. To say that over the next 6 months is that's the most bullish sentiment I've seen from any individual that's gone on CNBC in certainly 2022. By far. That is a massive statement. And I'm going to remember this. And if this gentleman's right about that, holy smokes, man, I'm going to come back and give him love for that, because that's insane prediction. Like, we got to watch that one more time. Like, what?
But some of which have life in them and are going to bounce back. But they're not just going to bounce back 10%, 15%. Some of these names have the chance to triple, to double over the next 6 months, especially if there's a sustained market rally. And I want to be exposed to those. As good as the big techs are, they're not doubling or tripling.
Well, let's talk about the big techs, because you...
True. That's insane, though. Wow.
Give us a fully unbiased opinion of all of them, since you don't own them.
Right.
Who do you think you should be most confident about coming into the next 3 days?
I think Apple. Apple's the class of tech. Apple and Tesla have done the best for most of this year. Tesla's fallen off a cliff in the last week and a half or so since earnings, but Apple has stood strong. Obviously we've got some reports, which we often do. It's almost an annual event. Usually out of Asia, we get these supply chain reports. Apple's cutting back on the supply chain. I find often that, it's sort of like the blind man feeling parts of the elephant, trying to make a conclusion about how that earnings are going to go, and then Apple ends up surprising. We got reports today that Apple was raising prices for a lot of its services, which could be baked into next quarter's guidance. So I think they're the strongest. And after that, I'd say Google next. Google is no Snap. And then as we get into Amazon and definitely
Where's
Meta.
Microsoft? Where's Microsoft in that mix? I'm very surprised that you haven't said that name yet, because when I ask others, such as the entire investment committee that I've seen for the last couple of days posing the same question to from our halftime report, it's Microsoft. All across the board, most optimistic about.
I'd put Microsoft after Google, after Apple, ahead of Amazon, ahead of a Meta. They're the class of enterprise software. But enterprise software has been a bear over these last few weeks and months. A lot of SaaS names have really been trashed just in the last few weeks, and Microsoft's been affected by that. They're a great company, but when cloud gets tossed aside, Microsoft goes with it. So I think they have a chance to have a good...
Look at that. It sticks out like a sore thumb, as they say, right? Meta, 61%. It's like so far underperformed all the other stocks out there. Wall Street is just so getting that wrong, in my opinion. And we're going to see it over the next few years. Anyways, I don't want to save my Meta commentary for the Meta video, but yeah, that's intriguing.
It's just, I put them in the middle of all the big techs.
Interesting. Okay. So obviously he's bullish on big tech. Very clear about that, right? But he's much more bullish on the more beaten down stocks. I would love to know what he owns. Maybe it's a Shopify, maybe some of those sorts of stocks that he's thinking about. Maybe it's a Zoom, or, I don't want to necessarily guess, but he's clearly talking about the more beaten down ones. And like I said, that was such a big prediction. I thought that he thinks countless of those stocks are going to 2x and 3x over the next 6 months. I mean, just a incredibly bullish prediction there, okay? Alrighty, home builder one. Let's watch this one, and then we're going to get into a little Meta.
Builders, but you may be surprised to find out that the sector has been quietly beating the S&P over the last 6 months, and the sector might not be done. Jeff, you've been watching this one.
Okay, so first off, let me give my opinion why this has happened, okay? I'll put myself on the panel. They need to make me a little screen right here, okay? The reason that this has happened, one is the home builders have had this incredibly strong backlog, right? So it's making all their numbers still look great in 2022, right? Secondly, and I think this is extremely important to everybody out there to understand this. All of those stocks, what do they have in common? They all trade at incredibly low PE ratios and forward PE ratios and price to sales ratios as well, but no one really judges them on that. It's more P's and forward P's. Therefore, at some point in time, it's just like, how much do we want to push the stock down? Even if you expect those companies' earnings to fall 50%, let's say, which is actually a possibility in 2023 or 2024, right? If you expect their EPS to fall 50%, but they're trading at a 5 P ratio. So what's it put them at, a 10 P ratio for the next year, something like that? That's not that expensive. So that's why those stocks haven't gone down as much as you might think. between the backlog and just the compression on valuation already at this point in time, okay? I'll save more commentary about the home builders in just a moment. I want to hear what they have to say here, okay?
Yeah, I took a look today, and obviously it's hard to really pound the table on home builders just given the setup for housing seems so terrible, but it is really interesting. You go back to the relative lows in April for home builders, and like you said, they've outperformed by about 8%. And during that time, you've had rates, look at the 10-year from 2.6 to wherever we ended today, 4.25 or so. So you would think that would be an unusual circumstance to see that kind of move in rates and then home builders relatively outperform. So we've talked about this in the past, but you have valuations that are very depressed, and then this history that home builders do the bulk of their underperforming prior to actual recession period. So even go back to 2008, I think we have a chart on this. I think they actually marginally outperformed, or at least they were flat to the S&P 500 during the actual recession in 2008. So
now you might think, oh, that's good. That means home builders are safe during that time. No, here's the problem. During this time period, what did you see? Massive amounts of other stocks go up in a crazy fashion, right? The market bottomed around February, March of 2009. And so countless other stocks doubled, tripled, quadrupled by the time the home builders ever started to go up in like 2012. So it might seem like, oh, maybe that's a safe place to hide money. Nah. You're going to miss out on massive epic gains in countless other stocks during that time period.
Hard to pound the table on it, but very interesting price action in the face of moves in the bond market that you might think would be very difficult for home builders. So certainly worth thinking about here as I think we're approaching potentially an actual economic recession.
Yeah, I would agree with that. I mean, these stocks, DHIs, for example, trading sideways for a while, there is another leg lower. By the way, Melms, it just dawned on me as I'm sitting here looking at the very handsome Jeff Mills. In the summer of 1983, Tom Cruise was in a great movie. You might remember Risky Business. He played Joel Goodson. And if you look at that shot right there, please put that single shot of Jeff Mills. That is the foyer, if you recall, that Tom Cruise sang the song in his tighty whities across that thing. That is the same shot. I actually encourage Jeff Mills to reenact that after the show tonight. Maybe put that on.
I should have probably watched this clip before. I don't want to get demonetized for this. Holy smokers, man.
All the time. Maybe he does that every night. Maybe it's a regular thing in the Mills household.
You never know. And listen, I wasn't even born in 1983, so I never saw it.
Nice dig.
Wow, there's nowhere to go from there.
No, it's not, but I'm right. And the people on the Twitterverse will know. I am telling you, that is it. I can see Tom, who happens to be a fan of Fast Money, by the way, watching this right now saying, holy bleep, that's the foyer that I danced across in the movie.
I'm sure he is.
Yeah.
Okay, holy smokers, that ain't no joke. It's okay. I should have probably watched that one before. Sometimes I don't watch these before, and I just play it, and oh my gosh. But in all seriousness, in regards to home builders, a lot more pain ahead for those guys. A lot more pain. In terms of the numbers, the stock price that's debated how much more of those ones will go down or not. But in terms of pain, definitely more ahead. RH is a company. I really want to buy RH at some point in time. I'm in no rush to get an RH. There's so many other stocks that are heavily discounted. And RH, I look at it as potentially having more downside ahead, right? Why would somebody go buy a new home right now at 7% mortgage? There's some folks talking about 10% mortgages by February. I reacted to a video recently on this channel where a gentleman made a strong case on why mortgage rates are going to 10% by February, right? And so why do I have to go run out and buy an RH right now, right? At some point in time, I might be interested in that, but it's not today. So for those stocks, I think they're going to have trouble finding any buyers come into them anytime soon outside of a massive rally in the market that just pulls up everything just for the mere fact that people are going to look at it and like, why do I need to buy a home builder right now? Like why is housing on all of a sudden explode higher, right? Unless mortgage rates drop back under 5%. And, there's a lot of folks that obviously don't expect that happening anytime soon. Meta.
We have a big loss in Meta, like many, many investors have. We're starting to face year-end. Tax loss selling kicks into play. But that wasn't the reason. Clearly, the move into...
Kevin O'Leary is not even a stock market guy, okay? He's not even a stock market guy. Whether Kevin sells or buys Meta is completely irrelevant. This is no, he's not even a stock market guy. Like, come on. But I understand he's on Shark Tank. It's part of the CNBC squad, so they like to throw him on there. But I'm just like, it just cracks me up. They throw him on there. Tax loss harvesting, in terms of this year, there could be definitely some of that, but usually I worry more about tax loss harvesting in a year like last year, where you had a very hot front half of the year with a very disappointing kind of, tail end there. That's a situation where I worry a little bit more about that because people are looking to offset gains. This year's been a tough year to get gains, so I'm not as concerned as I am with other years, but, it's definitely something that some people do out there.
The metasphere and the model that's going to exist when it exists is way out there. Everybody knows that. But when I start to see activists beat it up and start to push on every single angle, this is before the note, the rumors are in the street that many shareholders were unhappy and pushing at the company. So you know that is going to put pressure on the stock, just from the fact that shareholders like me are facing year end and saying, I've got to sell some of my losers. So between now and December 15th, the stock is going to be under tremendous pressure because it's an institutional holding around 2.5%. When people look through a reason to own it going forward in a slowing economy, it's really hard to stay long. And I'm just like everybody else. I looked at it and said, where can I deploy this capital elsewhere? There's many other options where there's great value and less pressure on this whole metaverse issue. And I sold it. And we took a huge hit on it. Sometimes you get it wrong. I got it wrong on Facebook/Meta.
And you'll get it wrong on the other side, Mr. O'Leary. The issue is Wall Street's never understood this stock. I've watched this company since they went public. They were completely clueless about it. They didn't even understand how Meta made money. Like, how does Facebook, how are they going to make money? Like, literally, even the most basic concepts around this. They have no clue. They don't know what the difference is between this and this other social platform and this. They have no clue how much IG Reels is taking off right now and how much that's going to show up in the numbers next year. They're completely clueless on this stuff. And they've always been that way. They're still this way. Metaverse, these people don't even understand Facebook and Instagram yet. And TikTok and Snapchat and all those things. They don't even get that. Never mind the metaverse. They got no clue how massive that's going to be. They'll see it in the numbers in future years and it'll start to click with them when they see the numbers come in. But until they see the numbers come in, they don't understand the stock. They don't understand anything about how social media works. They don't get it. They don't get it. Most of these people that run the big money are folks that are in their 50s, 60s, 70s, 80s. They don't understand it. They never have. They probably never will. So Meta will likely always trade at a discount compared to its other big tech peers that are easier to understand. Because when you go to these older folks that run this big money, if you pitch them Apple stock, they get it. They're like, oh yeah, the Apple store is busy. People go to buy the new iPhone and, I signed up for the Apple iCloud and I pay $9.99 a month. And, oh yeah, my grandson, he bought a game on the iTunes store and, he spent the $5 to get it. Like, they understand that. That's a concept. Meta is so far out there for them, they can't even conceptualize it at the end of the day. And so that's always been the issue for these folks. It's still the issue to this day. And despite it being still the number one place you're going to advertise in the world on their platforms, and then everything comes after that, I know everybody that runs every business out there, you're going Facebook, Instagram before you go anywhere else to advertise. Then you can worry about Google search. Then you can worry about YouTube. And then way down the road, you can worry about TikTok and Snapchat. Those are jokes. Those are complete jokes. Twitter, all that's a joke for advertising and spending money on those versus, you can't even compare them.
Now I'm willing to move on and look at it again in the future. I'm willing to look at this stock again when you can prove.
You will when it's 260, Kevin. Don't worry. You will.
Me. What metaverse looks like and what the business model's like.
Okay.
Because I believe in billions of users.
So you're not the only, as you suggest, unhappy shareholder. I think we can characterize Brad Gerstner as somewhat frustrated. He wrote an open letter. He, of course, of Altimeter. He's a frequent guest on our program, and many of you know his views on the matter. He has been a steadfast supporter of Meta, Facebook, and their management team.
Now I see why Kevin sold Meta. He sold it because he needs to pay his look like Zoom bill or something going on there.
However, he writes an open letter today. Here it is. It's to Zuckerberg and to the board, in which he says, quote, Meta has drifted into the land of excess. Too many people, too many ideas, too little urgency. This lack of focus and fitness is obscured when growth is easy but deadly when growth slows and technology changes. The facts, he says, are startling. In the last 18 months, Meta stock is down 55% compared to an average of 19 for its big tech peers. Your PE ratio has fallen from 23 times to 12 times, now trades at less than half the average PE of your peers. And notably, this decline in share price mirrors the lost confidence in the company, not just the bad mood of the market. And then he goes on, Weiss, to recommend a 3-step plan in which he thinks will help fix the situation. He just says simply to me when I talked to him earlier, the age of excess is over. And they need to.
Meta is arguably the most focused company I see in big tech. They have 4 things they're focused on: Facebook, Instagram, WhatsApp, Metaverse. That's where their 4 focuses are, okay? Every single other big tech company is focused on a whole lot more than 4 things. Even the great Apple, which Steve Jobs always believed in having a few things you're great at and being focused on. If you look at how many different products and services Apple has at this time, it is spread, I don't want to say spread thin, but it is so spread out now, it's insane. Google, oh my gosh, do you know how many projects Google's working on the DL and on the front part of that? How many different businesses they're in that are all over the place? That's the thing. Google's business are all over the place. They got Android, they got Google Search, they got YouTube, they got so many other various businesses, right? Microsoft had some interesting acquisitions, even in the cybersecurity space. They've, Activision Blizzard, right? Amazon's all over the place. We know that, right? And so I just think it is, it's just frustrating, man. It's frustrating. That's the best way I could put it. Thank you for giving me shares for cheap, and I'll continue to take those shares off these folks. But it's just, oh man, it's almost laughable at this point.
Some of the weight that they had on when times were rich, and now they're going to be more lean, and they need to be leaner and meaner. This one maybe more than most because of all the reasons that Gerstner laid out for the reason why the stock is down so much. What do you think?
Well, first of all,
I haven't seen Wall Street get a popular stock this wrong since Tesla in terms of a popular stock. Obviously there's always a debate. They could get a lot of stocks wrong, right? But in terms of one that everybody knows about and they're getting it so wrong, it's this stock right in front of you. They're getting it so wrong, it's not even funny. And everybody knows about this company, no different than everybody knew about Tesla. I don't think Meta has nearly the upside that Tesla did back in the day, but they're getting this so wrong, it's not even funny.
He's a great investor. We know that. We've seen his numbers time and time again. And his ideas are all good ones. But the question is, are they going to take hold? And the answer firmly is no. That Zuckerberg's not going to do a 180 and say, hey, I'm giving up on the metaverse. He changed the name of the company to it. So I came on the show a couple of weeks ago and I said I'd be a seller. And I'm not ready to short it because of the valuation, but the time will come. Because the metaverse, look at how Facebook got into business, right? They weren't necessarily the first ones to do the Facebook. I mean, you had MySpace doing it, but it was a category they essentially created and they won. They're late to the metaverse because you've got Unity, you've got Epic Games, etc. And
the fact that he even put those companies into the same category just shows me the clear lack of understanding about where Meta's at with their projects and what they're doing. No, oh gosh, man, it's almost painful.
Basically, and you don't know what that's going to be. So it's going to be 10 years, even if it's only $5 billion they're spending, it's still quite a bit, while their core business is atrophying a little.
Well, see, one of the problems one of the problems that Gerstner has is he says they have let the narrative, Brenda, you own the stock too. He says they have let the narrative take hold that they are only focused on the metaverse, and all they care about is getting to that pivot point whenever that is down the road, and it obscures the fact of how strong the core business is.
That I agree with. That's a good point. The narrative around Meta has become too much about metaverse from the media side, from the Wall Street side, in the way they're viewing the company, right? And now they're only thinking as this metaverse. I'm like, I don't even understand this thing, and how big is it going to be? And I don't get it, so therefore I don't want to be in it. It's like, did you forget they own Facebook, WhatsApp, and Instagram, the 3 most popular apps pretty much in the world? Did you forget that almost every human on the planet uses at least one of their apps on a daily basis? Did we forget about that?
If they don't care about it anymore, and it's, the metaverse or bust. Now, I'm curious as to what you think as a fellow shareholder like Gerstner, a former shareholder like O'Leary, and whether you're thinking about making a similar bounce out of this thing.
We are not considering selling it at this point, just given the valuation is so down and out. And we agree that the core business is strong. I mean, there's 3 billion daily active users. There's a lot of value there, and certainly a significant competitive advantage within the industry. But I agree with Brad Gerstner. This is a time when, especially during times of crisis or times of economic downturn, that many companies can use to relook at their core business and figure out how to cut costs. They could certainly change the narrative without changing the name of the company back to Facebook, but change the narrative so it's not as focused on metaverse and certainly is focused on this incredible core asset that they have with the core business. So that is why we're continuing to own it, because of the value we see in the core business, not because of growth we see coming from the metaverse potentially. But we would hope that during times like this, the management team would refocus on profitability and focus on that core business.
That's like saying, you can only focus on like one thing for a business. No, it doesn't work like that. It's like saying Tesla can't focus on, anything else other than selling Model 3s and Model Ys. It's like, what? No, that's not the way it works. So it's like saying Amazon can only focus on their e-commerce business and shouldn't be focused on Amazon Web Services or Twitch, which they own, or Whole Foods, which they own, or Zappos, which they own, right? Or their advertising business, which they own, or anything else. That just doesn't make any sense. The metaverse is the single biggest opportunity in the world from a financial perspective that's going on out there by a mile. It's not even close. And Meta is in the lead of this game. They've got to invest aggressively, and they have the balance sheet to do it. They have the resources to do it. And they have, they could actually realistically pull this off. They have the user base to do this and to pull this off and be a success. So they need to continue to invest aggressively. Just because you might be in an uncertain time or even in a recessionary time, you better be investing aggressively during that time period, because most other companies don't have the resources to make that happen. And the metaverse is a multi-trillion-dollar opportunity. If Meta doesn't invest in that, what are they going to do with their money? Do a share buyback and miss out on a multi-trillion-dollar opportunity? Like, come on, man. When these sorts of opportunities are once in a generation, pretty much, right? The smartphone changed the trajectory of countless companies, including Meta's, right? And obviously Apple. That was a multi-trillion-dollar opportunity for Apple, right? If it was not for the iPhone, Apple would be a fraction of the size it is. Because of the iPhone, then they had success there. The App Store built out, iPad business built out, all these products that we use like AirPods and Apple Watches and all these things built out from that, right? Because of this one successful product that had huge potential. The same exact thing is going to be true in the metaverse, but we're talking about this is on a way bigger level. When you start to break down like how this is going to change almost everything in relation to business over the next 10 to 20 years. And so those opportunities we haven't had that opportunity since the smartphone. And Steve Jobs showed off the smartphone in 2007, the original iPhone, right? 15 something years ago. So here we are at this big moment that Meta needs to invest aggressively against this. And I would be disappointed if they did anything else, to be honest. I don't want to just look at this company as it's a cash flow machine of Instagram, Facebook, and WhatsApp. That metaverse opportunity is bigger than all three of those combined. So you have to invest aggressively against that. And if you don't, Zuckerberg's not done. That's the thing. Like a lot of these CEOs of these companies, they're done, right? Bezos is out of Amazon now at this point in time. He's done with that, right? Tim Cook eventually is going to leave Apple, right? And obviously he wasn't the one that started Apple. He was just very important there. It's kind of like a number two behind Steve Jobs, right? He's eventually going to be out of there. The folks that obviously were the founders, Sergey Brin, those guys, of Google, those guys are out now at this point in time. They got other people focused on that business and really running that show. Zuckerberg's the one CEO of the big tech companies. Bill Gates is long gone from Microsoft. He almost has nothing to do with that company. Zuckerberg's the one guy in big tech outside of Elon Musk at Tesla that is actually focused on running the show, right? But the difference between Musk and Zuckerberg is Musk is very focused on a lot of different things, right? The Twitter acquisition, SpaceX, the Boring Company. There's a lot that obviously Musk has, going on, where Zuckerberg's only focused on Meta. And, I just think it's very dangerous to bet against a guy like that. And, by these folks not buying the stock or even selling the stock, it's basically a bet against the stock and the bet against that individual. And I just, I think there's been a lot of things that have been done over time that people didn't understand. They never understood Facebook when they went public. I'm talking about the Facebook platform. Then when Zuckerberg bought Instagram for $1 billion, there was countless people that said, what a stupid acquisition. This new app called Instagram, he's spending $1 billion on that? That's absurd. One of the very few people, and give him mad respect for this, one of the few people, when Facebook bought Instagram, that came and said, you know what, I think this is an ingenious deal and everybody's going to see this, Gary Vaynerchuk. He's one of the very few that was a publicly known person at that time that came out and said, Facebook is stealing Instagram for $1 billion. No one understood it. Everybody doubted it. Everybody said, that is such a waste of $1 billion. And $1 billion for Facebook back in those days was a lot of money for them to spend on this. Instagram today, if that was a standalone company, would be worth $100 billion plus, if not a couple $100 billion, right? Then they bought WhatsApp for $19 billion. Oh boy, okay. And all along, Wall Street didn't get it until they started to see the numbers roll in, the revenue roll in, the profits roll in, right? Now they haven't seen that. And so now they're, without the numbers, they're lost. They don't understand this game. And so as the numbers roll back in, they'll get it again, and then they'll all pile back into it like they will, every single time when it comes to these stocks. And but I wouldn't count on them suddenly understanding it. Wall Street doesn't understand a lot of these things. Wall Street didn't understand why Tesla was going to have leading margins that were going to be far exceeding the auto industry. Most Wall Street couldn't even conceptualize that thought. Somebody like myself looked at it and I'm like, I get it. Like, how do you not see this? Like, do you see all the cost savings they have? And you see Sandy Munro break down the car and Wall Street just didn't get it. And it's like, how are you guys missing this? But, sometimes it's hard for folks that, are a little more advanced to understand these things. Some folks are great, even in their 60s, 70s, 80s. Like, they can still understand new business models and understand these concepts and why this is going to work. Not everybody's like that. And I would say most on Wall Street, they don't understand any sort of newer age business models and why this is attractive to, advertisers or new people in general, or the next generation on the come up and things like that until it's already there. So, there was people that were laughing at iPhone when that was first shown off, including Steve Ballmer, who was leading Microsoft at that time. Oh, $500 for a phone? You remember that clip? Oh my gosh, you gotta be kidding me. And it can't even do da-da-da, or whatever he said there, right? And there were people that were laughing at that. Now people gladly spend $1,000 on a smartphone now at this point in time, right? It's just, these things take time to play out, and it all works itself out. So anyways, guys, much love as always. Appreciate you joining me. A little fired up for this video, a little fired up. I don't get that fired up on the reaction channel very often, but today was one of those videos. Got a little fired up here. So I appreciate each and every one of you being subscribed to this channel, 17,300 or 400 subscribers, something like that. I appreciate each and every one of you that come check out these videos on a daily basis. I don't always release a video on a daily basis, but I appreciate you coming to check the channel when I do release videos. And if you got notifications on, I appreciate you as well. If you're looking to join us in the private stock group, the private Discord chats and things like that, check out pinned comment down there. Much love and have a great day.